Ed Yardeni is president at Yardeni Research. He's joining us now to take some questions. Ed, good morning. Great to have you with us here. 5,000 plus on the S&P and high levels coming. And you've been calling that for a while, calling for that for a while. the problem, not the problem, but some of the skeptics, and there are enough, saying that there's a fair bit of intermarket divergence in the US as well. The Russel 2000 is not down in the dumps, but is doing very poorly. And, this rally is being driven by just 5 or 6 names, large names on the S&P. The intermarket divergence is never good. I mean, it has to resolve one way or the other. Your thoughts, Ed?
Well, it's really not quite accurate. If you actually go back to the start of the bull market in October 2022, you'll find that there are several sectors and industries other than those that are directly related to technology and communication services that are up by 20% or more. And then the ones that are lagging have seen low double-digit increases. And it's really only utilities and real estate that has basically not moved at all since the start of the bull market. So there have been lots of opportunities to make money in different sectors. I think what's really going on here is that the mega cap 8 have simply done so well that they left everybody else in the dust, but everybody else has done pretty well also. So that's really, I think, what characterizes this market.
Ed, for the Russell 2000, and correct me if I'm wrong, I was reading that profits for the quarter are down some 25% for the Russell 2000 group. Is that correct? I mean, is there a big difference?
Well, I'm not a big fan of the Russell 2000. I much prefer the S&P 600 small caps. It's 600 names instead of 2,000, and the S&P 600 has a higher standard, if you will, for the success of companies, for their earnings ability. There are a lot of companies in the Russell 2000 that lose money. That's nothing really new, and so I prefer to invest in companies that actually have earnings. And for the small cap and mid caps, I think you're better off looking at an index like the S&P 600 for the small caps and S&P 400 for the mid caps.
Ed, hi, good morning. How are you feeling about the Indian markets now? The going has been great so far, but there are some hurdles that this market is facing at higher levels. Do you think we can get past them? And will India continue to be the preferred pick within the emerging market space this year?
Well, I think India continues to be a beneficiary of the geopolitical tensions, particularly those between the United States and China. I know that the Chinese government, President Xi, has kind of reached out to American investors, American capitalists, and basically asked them to come back. But there's a lot of skepticism about whether the Chinese Communist Party really wants to provide the kind of economic environment in which capitalists can thrive. And we can see this with their attempt to manipulate the stock market. It's very embarrassing for them to see their stock market down by over 50% over the past 2.5 years, because that's clearly a reflection of how bad the economy is and how badly it's been managed. And on a relative basis, I'd say India sometimes appears to be more chaotic, but it's also, I think, a much better environment for capitalists. And I think we are seeing India benefit from capital leaving China and moving to India.
Indeed, Ed, and the screen is telling us that as well. We have a plate out there which tells us that the Indian market's up 20% in the last 12 months. The Hang Seng is down close to around 25% odd. And we have a big week in terms of US data. You have the CPI number that's out. There's going to be retail sales number. You have 8 Fed speakers this week. So it's a rather big week in that sense. Add to it some manufacturing data as well. What's your view with regard to what happens on the Fed's rate cut trajectory? Are you factoring in that from May itself we'll see that, and quantum as well?
Well, I think this week the Fed is going to get data that confirms that inflation is continuing to moderate. And I think it's going to get some data showing that the economy is slowing a bit. Retail sales could be on the weak side. Industrial production could be on the weak side. So we may have a week of data that favors the Fed moving sooner in terms of lowering interest rates. But the Fed really, I don't think, wants to do that. I think the Fed recognizes that the economy is doing well enough that if inflation continues to moderate, that's a good thing. Why mess with success? And so I think the Fed is not going to go for a rate cut in March, maybe not even in May. I think the first rate cut comes in the second half of the year. And so I think all in all, we'll get maybe 2, maybe 3 rate cuts this year. I don't think we're going to get the 5, 6 rate cuts that some areas of the markets are still predicting.
Okay, all right, Ed, we'll leave it at that. Thanks a lot for joining in and giving us your view on the markets and the way forward. So don't expect too many rate cuts from the US Fed this year around. Let's